Tesla's stock is expected to take this ultra-rare direction within 12 months. The EV manufacturer added to weekly losses late Friday after an S&P 500 committee failed to add the company to the index. That's why Tesla's stock is expected to take this ultra-rare direction within 12 months. Welcome to Trending's Finest, where we give you the hottest updates on the world's most viral news, videos, and stories in the most exciting format. Click that subscribe button and hit the notification bell to not miss a single beat of the world's pulse. Tesla, which is up nearly 400% so far in 2020, is among the most loved and hated stocks on Wall Street. It's the U.S. stock market's highest profile bet on the rise of renewable energy and the decline of fossil fuels. And Tesla's Model 3 sedan has made major inroads among consumers. So where exactly is this fickle stock heading? Find out in our video today, including the latest news on Musk's ongoing burn war with a fellow tech giant, and most importantly, the crucial advice smart investors should take. Stay tuned. Wall Street stock ratings is sounding a warning for Tesla. In the financial media, Wall Street typically means U.S. brokerage firms and often the analysts who work for them. They're also known as sell-side analysts. They work independently of the firm's sales teams, but there's no question that Wall Street's job is to sell stocks. So when you see a high level of sell ratings on a stock, take heed. Tesla Inc., US TSLA, is the poster child for high-flying stocks during this pandemic year. The electric car company's shares are up 435% this year and 891% in the last 12 months. And as the shares have shot up, many analysts have continually increased their price targets. But not all of them have kept doing so. And now, among 37 sell-side analysts polled by FactSet, 8 rate the shares the equivalent of a buy, while 11 rate the equivalent of a sell. The shares closed at $447.37 on September 2nd. The consensus price target among those analysts is $284.97, implying 36% downside for the shares. Tesla is not yet included in the benchmark S&P 500 index, US SPX, although it's expected to be added soon. It's rare for any S&P 500 stock to have a majority sell ratings, and none do at this time. But a quick look shows 33 stocks with sell ratings outweighing buy ratings. Tesla Inc., TSLA, fell 130 points, or about 26%, after posting an all-time high at 502.49 on Tuesday last week, battered by a broad-based tech sell-off and bull trap following the stock's 5-for-1 split on Monday morning. CEO Elon Musk's controversial electric vehicle manufacturer sold off another 6% in Friday's post-market after an S&P 500 committee defied popular opinion, choosing not to add the $390 billion company to the venerable index. The decision made by S&P Dow Jones Indices is a blow to Tesla investors who widely expected the company to join the benchmark stock index after a blockbuster quarterly report in July cleared a major hurdle for its potential inclusion. With a market capitalization over $370 billion, Tesla is one of the most valuable companies on Wall Street. Even after a 16% drop in its share price from record highs this week, Tesla remains more valuable than 95% of the S&P 500's existing components, including Johnson & Johnson and Procter & Gamble. Its recent stock gains have been driven by Tesla's unexpectedly strong quarterly results released in July, as well as by bets that it would be added to the S&P 500, which would trigger massive demand for its shares from index funds that track the benchmark. Tesla bears point to looming competition from Porsche, General Motors, and other longer-established rivals. They're also skeptical of Tesla's corporate governance under the chief executive, Elon Musk, who in 2018 agreed to pay $20 million and step down as chairman to settle fraud charges. Also, short sellers are betting $24 billion that Tesla's shares will fall, among the largest short levels on record for a U.S. company in dollars, according to S3 Partners. Tesla share gains. The stock topped out and reversed on Tuesday after Musk tried to capitalize on historic gains with a secondary offering of up to $5 billion. Public offerings typically yield lower prices because they attract less experienced investors while diluting share value, encouraging smart money to step in and trade against them. Along with the recent split, market watchers are shaking their collective heads, recalling similar games in the heyday of the internet bubble in the 1990s. The decision will have an immediate impact on buying power because SP 500 membership would have forced tracking funds to buy more than 120 million shares of Tesla stock. Index components must have a market cap of more than $8.2 billion and report 4 profitable quarters in a row, according to standard accounting principles. The company has come under persistent criticism from skeptics who insist that profits rely on accounting tricks, and these alleged practices may have been factored into the exclusion. Stay tuned to find out the technical outlook for Tesla, the battle of the tech giants, and finally how this bittersweet stock pick could potentially be the most dangerous in Wall Street. Wall Street and technical outlook. Wall Street consensus highlights major caution about the long-term outlook, with a hold rating based upon 5 buy and 15 hold recommendations. 10 analysts, or 1/3 of the total, recommend that shareholders take profits and move to the sidelines at this time. Price targets currently range from a low of just $17.40 to a street high of $566, while the stock closed Friday's U.S. session $126 above the median $292 target. Tesla may have completed an Elliott 5-weight pattern off the June 2019 low, raising odds for an intermediate correction or bearish change in trend. However, it could be weeks or months before the technical outlook becomes more transparent because despite last week's downside, the stock has not broken short-term support levels. That could change if the SP 500 exclusion drops price through Friday's low at 372 when U.S. markets reopen following the Labor Day holiday. The battle of the tech giants. Elon Musk's battle with fellow tech billionaire Bill Gates continues, with the latest jab from Gates casting doubt on Tesla's plan to bring electric vehicles into the world of long-haul trucking in what is the latest jab traded between the two business leaders. Gates wrote in a blog post in late August about his problem batteries are big and heavy. Even with big breakthroughs in battery technology, electric vehicles will probably never be a practical solution for things like 18-wheelers, cargo ships, and passenger jets. Electricity works when you need to cover short distances, but we need a different solution for heavy, long-haul vehicles. Gates also left Tesla out of a list of companies that have made breakthroughs in electric vehicle technology, even though Tesla has furiously promoted its yet-to-debut Cybertruck. The two billionaires do not always see eye to eye. Musk has repeatedly claimed that the coronavirus panic is overblown, while Gates has warned about the possibility of a world-changing pandemic for several years. Musk has called Gates underwhelming and trolled the Microsoft co-founder with posts like, "The rumor that Bill Gates and I are lovers is completely untrue." Tesla could be the most dangerous stock on Wall Street. Tesla shares may be up 400% this year, but one investment researcher is sounding the alarm on the stock. New Construct CEO David Traynor calls Tesla the most dangerous stock on Wall Street and says the fundamentals do not support such a high price and valuation. Whatever best-case scenario you want to paint for what Tesla's going to do, whether they're going to produce 30 million cars within the next 10 years and get in the insurance business and have the same high margins as Toyota, the most efficient car company with scale of all time, even if you do believe all that's true, the stock price is still implying that profits are going to be even bigger than that, Traynor told CNBC's Trading Nation on Thursday. He notes that the stock price is implying anywhere from 40% to 110% market share based upon the average selling price. At its current average selling price of $57,000 and assuming 10.9 million car sales by 2030, that implies 42% market share, Traynor says. Tesla trades at 150 times forward earnings. We think this is a big, one of the biggest of all time houses of cards that's getting ready to fold, said Traynor. He adds that its recent stock split could also prove dangerous to new investors getting into the stock. Stock splits are inconsequential to value. They're not changing the size, they're just dividing it up into more pieces. Honestly, the stock split can be seen as a way to lure more unsuspecting, less sophisticated traders into just trying to chase this stock up, and that's not a real strategy. A more realistic valuation, says Trainer, would be far lower than current levels. Around 1/10 of what it is probably appropriate if you look at, kind of a reasonable level of profits. Tesla doesn't rank in the top 10 in market share or car sales in Europe for EVs, and that's because the laws changed in Europe that have strongly incentivized the incumbent manufacturers to crank up hybrids and electric vehicles. The same is coming in the United States. I think realistically, we're talking about something close to $50, not $500 as a real value. Trainer does credit Tesla CEO Elon Musk and the company for accelerating the trend and making electric vehicles more mainstream. A focus on fundamentals, though, makes Tesla a no-touch for him. That's our advice. Watch out for the toppling of this house of cards that is Tesla. What about you? What's your advice for fellow investors? Tell us in the comments down below so we can compare our investor notes. For more of our best stock tips during these uncertain times, check out our other video. Warren Buffett urges anyone listening should start before quarantine is over to make money. If you invest in these stocks now, chances are you will profit. We've combed through the advice of various experts from Wall Street and compiled a list of 7 magic stocks that will stand the test of these troubled times and will come out strong in the post-coronavirus world once widespread quarantine orders are lifted. We'll also share the best advice in a black swan market like right now. Watch it. Thank you for watching. This is Trending's Finest, always the trendiest, always the finest.